Welcome to the Silent Trading channel on Monday the 23rd of March. Today I'll be analyzing and updating the gold chart for you guys on right now because to see whether are we going to enter a position from where we are right now, or are we waiting for the price to retrace, or are we waiting for the price to do something, reveal some price action before we start buying. And before I start, please subscribe, like, comment and share if you like this video and to support me in my trading journal. So today I'll be starting on the daily time frame first because the daily chart shows us a break below but not a really break of support yet. Because why? Because the daily candle dropped all the way down to attack the monthly support, and as I have always said to you guys, that support are meant to be broken, support are meant to be accumulating buy side volume, right? Support are meant to use to accumulate buy side volume, and when support or key level support is being attacked, the next thing the chart will have to do is to break below, right? And after a break below, it will depends on whether the chart is going to really break that support or not. It depends on the pullback of the chart or a body candle close, right? And as we can see, once the monthly support has been attacked, and then the chart break below, right, expand below all the way to create a bottom wick of about where it went all the way down to create a bottom wick of about 4098.74 before it start pulling back, right? And this pullback indicates that the market has already accumulate enough buy side volume, and then has already taken out all of the buyers, all of the buy side position holders, right? So buy side volume has already been taken out from this drop over here, from this dump in the chart, and then pull back. It is telling us that buy side volume has been taken out, right? And after buy side volume has been taken out, the next thing the daily candle is going to do is it could either close a red candle, it will drop down once more. It could either drop down once more to close a red candle, to close as a bearish candle, and then it could start reversing from the latest bearish candle. It is only possible but not yet a reversal. Because why? If a reversal is not formed yet, if a reversal is not complete yet, we will not call it a valid or a valid bullish reversal, right? So right now, the thing we can do right now is, if you haven't been buying from below, right? If you haven't been buying from below when the chart broke down and form a new low, right? If you haven't been buying, the next thing you're going to be doing is to lower down to the 4-hour time frame, and then to see whether there will be any spot that will give you an opportunity to enter a position. On the 4-hour time frame, we haven't seen any spot to enter a position yet, except what? Except this 4-hour body candle close, right? And then the next candle push up all the way to create a high of about 4,459, right? So about 30,000 pips movement from the open to the high, which means when it push up all the way to form a new high over here on the 4-hour time frame, this is a spot that I will be selling. Because why? It formed a new high without touching the next resistance. It formed a new high without attacking the next resistance, indicating that the chart has stopped accumulating sell side volume, right? Attacking the resistance means the chart is going to accumulate more sell side volume, and it will break up and it will break above further. But after creating a high, after forming a high while not attacking resistance, means not triggering sell limits, not triggering people into entering a sell side position. It is telling us that once it pull back, it is telling us that the chart may still go down further, right? So it all depends on the 4-hour candle right now, whether it is going to form a bullish price action, and a bullish price action also has to be complete before we can buy at the next retracement, right? So the next pullback, right, the next pullback of the next 4-hour candle it is where we're gonna buy if this candle completes this bullish price action, right? But on the 4-hour candle, on the 4 hours chart, we haven't seen a bullish price action yet, right? But on the 1-hour candle, we have seen the chart already form a bullish price action, and a complete bullish price action at that, because this break above chart, this break above candle has already broken resistance, which is the first resistance, and broken the second resistance over here, which is also the reversal and also a key level resistance, which means on the 1-hour candle right now, the chart has a chance of going up more, right? Because resistance has been broken. And you can see proof of this because the latest candle right now has already pushed down, form a bottom wick before pulling back, and then start pushing up. Which means right now, if the chart is going to push up further, right? It's going to push up further and create a new high that should be higher than the previous high over here, right? Which means this candle is going to slowly go up, slowly ascend up, and then break this previous high. And then if the next 1-hour candle is able to break this previous high, is able to close above this high, right? Break this previous high means must also close above this high. Then at the next 1-hour candle retracement, the next 1-hour candle pullback, it is then where we are gonna buy, right? So on the 1-hour candle, we can see that this has already broke resistance, and once the resistance is broken, the next candle pullback, the next candle retracement is where we're gonna buy. But if you are not on the chart at the retracement and you miss the opportunity to buy, you gotta wait for the next chance to buy. Is this candle will have to push up and break this previous high, right? If previous high is broken, the next candle retracement is also where we're gonna buy, right? So are we clear on the condition or the criteria that we're gonna be buying, right? Because every time we need to buy, we need some confirmation. Don't worry, never worry about the position that you're entering would be too high. Because why? Because a higher position that is less risk, that involve less risk than a better position would be a lot better, because a position at a higher spot that has lesser risk would always be better than a position at a lower spot with more risk, because you'll never know if a bullish price action isn't complete yet. You never know where the chart, where the market is going to go down further. So by buying at the best possible spot that you think it is, it in reality it isn't the best possible spot, because if a price action isn't complete yet, isn't valid yet, it still has a chance of price pushing down further, right? Only when the price has broken resistance, or at least broken key level resistance, at the next candle retracement is where we're gonna buy, because breaking resistance means the chart is accumulating sell side volume and will at least go up to clear and take out all of that sell side volume, which means at the next candle retracement we buy, right? We buy after the chart has started accumulating sell side volume. We know that at least the chart will start pushing up to at least take out all of that sell side volume, which means we may not have a chance to hold on to that position for long, but at least we have a chance to close that position by profit, right? So the best thing in the chart is you must seize the chance to be profitable at all time. It doesn't have to be a risk to reward ratio of 1 to 10, 1 to 5, but it must always be based on your reasoning, be based on your understanding of the chart, right? It doesn't have to always be 1 to 5, 1 to 10 risk to reward ratio, but it must be based on your understanding. If the profit is based on your true understanding of the chart, any profit is fine, any profit is a good one, because why? You are trading based on understanding, you're not trading based on emotion, right? So right now, the next thing we wait for the 1-hour candle to at least break previous high, because previous high is also a kind of resistance. And once the previous high is broken, the next candle retracement is where we're gonna buy, because by buying right now, you still have a chance of the chart of the candle pulling back and then start pushing down. So why risk at the least possible spot? At least if you are going to risk at the best possible spot, right? But right now the chart hasn't shown us anything besides forming a low wick and forming a high wick. So we at least wait for the chart to form some price action, either by breaking high, either by breaking resistance, and the next candle retracement is where we're gonna buy, because a candle retracement is kind of like the Fibonacci, right? It's kind of like drawing a Fibonacci, and the chart is retracing to where? Retracing to a discount point, right? But I don't trade based on Fibonacci. I don't trade based on indicators. I trade solely based on price action, based on bar action, and based on human psychology, right? So for today, that is all I'm gonna be analyzing for you guys, and I hope to see you guys tomorrow, and I'll be updating the chart for you guys every day if possible, unless I've got something coming up, right? And for today, that's all I'll be seeing you guys for, and I'll see you guys tomorrow. See ya.